Welcome back. You're watching The Capital Point with me, Terry Anchebet, and we're focusing on manufacturing and the export space on this first premiere show of The Capital Point. And we're looking at a company now within the manufacturing sector that has gone through its major ups and downs, but has recently realigned, and we just want to find out what is the way forward. And joining me for this conversation is James Iraya Mwangi, head of the Harvest Data Terminal. Harvest is Metropol's data terminal. They collect data for on different industries, sectors, and support us on TV with data that we can use to help you make sound investment decisions. James, let's look at Eveready. Recently put in a turnaround strategy. It's been a couple of very difficult years for them. What's your analysis of Eveready just to kick off?
So we can start about the turnaround strategy. What happened in 2014, it was actually going, everything was, all our ratios, all the data was just pointing to it closing down. Reason being cheaper imports and counterfeits. So they came up with a turnaround strategy. Let us now focus on importing our own goods. Let us close down all the manufacturing that they were doing, all the production they were doing internally. Let us now focus on just bringing our own products. That was in 2014. And from there on, we can actually see a steady increase in terms to revenues, comes to now the clearing of the debt that they had. And for that reason, actually in 2017, they were able to dispose their factory in Nakuru, and actually got around 452 million. Which for the first time in 7 years, they were even able to give dividend to their investors. So the turnaround strategy is, they say it's a long-term project, but we can say it has made them now become, I would say, not because they're not yet profitable, but I would say they have a going concern.
All right. And of course, they aligned, the business to key revenue drivers, which almost goes it flips the coin on the conversation we're having today. Yes. About manufacturing. So they closed down the plant in Uganda. Well, the plant in Tanzania is, the operation in Tanzania is working. The operation in Uganda was closed. Kenya turned its strategy entirely. What's the financial health of Eveready?
Even before we even dig deep into the financial health, you start now asking yourself, is there a problem in the manufacturing sector, in the point that industries that are here, companies that are already manufacturing their goods in Kenya, is it a point that they cannot even be able to break even? Because if somebody is saying that I can bring batteries all the way from abroad, come to Kenya, pass through all the taxes, and still be cheaper, and still be cheaper than one that I've produced locally, then becomes a challenge. Is it that we are taxing them so much? Is it that there are so many in between people? And for that reason, since they turned around their strategy, we can see that what something that happened is that the assets went down because of the disposal of the property they had, actually by 38%. But something else that they did was that their liabilities actually were at 711 million as of 2014. But as of 2018, they were at 135 million only. So that is actually an 81% decrease in liabilities. Something else also people also look at is shareholders' wealth. So their wealth actually...
But the liability was due to the disposal of the land.
Yes, so part of the reason they say is that the 452 million they got actually in 2017, part of it went to pay off shareholders, and some part of it went to pay off their borrowings. And for also that reason, as we've been going to even shareholders' wealth, it moved from 218 million in 2014 to 549 million in 2018. So that's a 150% increment in shareholders' wealth. So you can actually see the turnaround strategy is actually working. And something else, also another issue that you may even look at when we look at financial health, is the current ratio. Current ratio is a liquidity ratio, basically meaning that a company is able to pay off its current liabilities using the cash that is available. We normally say a ratio that is above 1 basically means that the company is able to pay its current liabilities using its current assets, so the money that they have. And actually, as of 2018, the ratio was at 2.5. So meaning that actually...
So it is a growing concern. It is a going concern.
Actually, it does have a going concern.
But are you confident, though, James, that, given the story of where it is coming from and the fact that now they have changed the business strategy completely, gotten out of manufacturing in the sense of what manufacturing is, And they now say, you know, we're sustainable, we can use what is within the business to run the business. Are you confident of that?
Something else, you know, people, even as we're looking at these good numbers, is something we always call profit. Up to now, Eveready is not profitable. Last year, but one, that's 2017, they were able to make profit because of the disposal, the gain on disposal, the property they sold in Nakuru. As of last year, they actually made a loss of 115 million. 2014, they had made a loss of 117 million. So you see, yes, the strategy is working when it comes to, they are now clearing off the debt.
Managing costs.
Exactly, they're managing costs. They have laid off people, but still they are not
profitability.
They are not making profit. So that
do you think there's a possibility that they will?
The reason that they're saying, and actually it does make sense, is last year was because of the delayed extension of the election period, and also at the same time we also had there's a credit crunch per se, so people are not able to access credit to buy their products. So they say that is one of the reasons why now they're not able to be profitable. Something else, as even you're looking at financial health, is the Z-score, Altman Z-score. We normally use the Altman Z-score to look at the choice of whether a company is going to become bankrupt. And when you're using Z-score, we say a company that's at 1.8, the ratio comes at 1.8, is a company that's able to, that there is no foreseeable future they will be able to become bankrupt. Their ratio is actually at 3.1 as of now. So this is a company that will not go bankrupt as of now, is paying its debts. It's not profitable at the same time, but it has a going concern. So yes, there's a future for Eveready. I would say that, and let's see for the future what will happen there.
So to buy, to sell, or to hold?
Now, based on the all parameters, I would even question you. They are paying their debts. They have positive cash flow, so meaning they even have cash to operate. They are not going to go bankrupt as of now. But at the same time, the share price movement has actually been going down as of the last 1 year. So it's a point of saying, let it hold.
Wait, before
yes.
I know you, before we get into that, you've just reminded me something about the share price movement, which I had hoped to ask you earlier. What's your analysis of the share price movement?
52. We normally do share price. We look at a 1 year.
52 week.
52 week from now and 50 weeks 1 year ago. Share price was at 4 shillings. Right now it's below 1 shilling, so you can see the share price is not the market value is actually going down. Trading actually, we'll even look at the shares that are being traded in NSE. Actually, it's not actively trading. So for that reason, now to the question that you asked, to buy, to sell, to hold, I would say this to somebody who already has shares in a Eveready, hold. To somebody who wants to buy, it's something you can choose to buy.
It's a cheap stock.
Yes, very cheap, and it has promising, because actually even it's not going to go bankrupt as of now. So we'll tell you to hold and buy. But if somebody who's wanting to sell, I will tell him to wait.
Wow, okay, that's quite a positive sentiment for Eveready. I wasn't sure you were going that direction, given you know, all that has been going around around Eveready. But thank you so much for being on the show tonight and giving us this analysis of Eveready. And we'll see you again next Wednesday on the show. Of course, you'll be on other shows before then.
Yes.
All right, this is James Iraya Mwangi, head of the Harvest Data Terminal. Harvest Data Terminal is Metropol's data. I keep saying this story, and I think you actually should say what the Harvest is. So basically what Metropol Harvest does is that we are the data point and data pillar for Metropol TV. We actually have data on the sectors, industries, and actually companies within Kenya. We will tell you where to invest, we will tell you how much money to put, and we will tell you the risks and the return that you'll get. All right. Yes. And of course, the terminal isn't only for Metropol TV. It's actually available for sale to the public, to corporates, and the world at large. Well, and with that, we come to the end of the Capital Point tonight. Thank you so much for making time to be with us. My name is Terry Anchebet. Let's talk business again next Wednesday.